Good afternoon, everybody. We are getting ready to start our webinar. We're just going to wait another minute to allow a few others to come in. Get started in just one more minute. All right, Aliana, should we start?
Sure, go right ahead, Betty.
Terrific. All right, well, good afternoon, everybody, and welcome. Thank you for joining us today for this really important milestone for BII. This is the release of our long-awaited report on fearlessly funding racial and economic justice, insights from BII's Integrated Capital Emerging Fund Manager Cohort Alumni. I'm Betty Francisco, CEO of Boston Impact Initiative, or BII for short. I'm really, really grateful to be sharing this report with you on unleashing catalytic capital for impact investing at such a critical moment for our field. Before we get started, I would love to know who's joining us today. While I introduce the webinar, we're going to put up a poll that is going to ask you to share who you represent today. So Aliana will be getting that poll up. If you could just tell us a bit about where you're calling in from, what kind of organization you're a part of, that would be fantastic. So as part of our agenda, while you're doing the poll, we'll introduce our agenda for today. So again, I'm Betty Francisco, CEO of BII, and we're joined by Aliana Piñero, our BII Impact Director, who's going to be sharing the findings and the recommendations from the recent survey of our BII fund managers who participated in our cohort programs. I'll then moderate a fireside chat with two alumni from our program, Benjamin Van, who's the CEO of Impact Ventures in Dallas, and Justine Correa, who's a fund building specialist at Roanhorse Consulting, who is designing a fund as well. So we will close the presentation with a call to action for the field led by Savannah Johnson, BI's new director of the First Mover Fund and Incubator. And we'll then take questions specifically from all of you. Please do ask questions throughout the presentation. We encourage you to use the chat, offer comments. If there's anything that strikes you, please share your feedback with us throughout the webinar. So for those of you who are new to BII, want to tell you a little bit about who we are. So BII is one of the first place-based impact investment funds in the country to focus on economic justice and racial equity. Launched 11 years ago now, we invest in the people, places, and enterprises in New England that are building a more equitable and inclusive economy to help close the racial wealth divide. What makes us unique is we take a trust-based investment approach by using what we call integrated capital, the combination of financial tools from debt to equity to grants to help build financial, social, knowledge, and political capital in communities of color. Our bigger mission, why we do this work, is to help transform the impact investment field so that catalytic capital gets directed to investments that advance economic justice, racial equity, and climate resilience. Over the past 11 years, BII has invested $15 million into over 100 enterprises in Massachusetts and New England. And we support hundreds of small businesses annually through technical assistance programs and with our business support staff. As part of our broader work, We're looking to support the field of impact investing, and we do that through our fund manager cohort program, which has provided education and training to over 69 emerging fund managers and to hundreds of individuals using our integrated capital training program. In the end, we're trying to mobilize catalytic capital for communities that have long been underinvested in. Since 2020, BII has trained 69 visionary impact fund managers from 38 organizations as part of BII's fund manager cohort program. And you'll hear more about this program when Aliana shares her presentation. These funds have already unleashed the power of 18 different place-based organizations focused on advancing racial and economic justice in communities around the country. These pioneering leaders aim to raise over $370 million to invest in communities of color. So why is this topic so important and why now? So impact first, community-based funds are vital for economic opportunity and to advance racial justice. Traditional financial institutions like banks often overlook or undervalue the innovative businesses that are emerging from our communities. Oftentimes, their rigid criteria around credit scores or collateral, or even requiring personal guarantees, perpetuate systemic barriers that have long thwarted the entrepreneurial spirit in our communities. In contrast, our fund managers take an integrated capital approach like BII, combining flexible financing with deep community relationships and trust-based investing. And this allows them to recognize the true potential that others have missed by providing patient, supportive capital that early stage businesses need to thrive. And it's these fund managers from our cohort who are pioneering incredible new models of community-centered integrated capital investing to address these disparities. When we invest in local entrepreneurs and help them scale sustainably, we're not just creating individual success stories, but we're establishing anchors of economic opportunity in our places that create great jobs. They strengthen local supply chains, and they keep wealth circulating in communities. So this report, why we're so excited to share this today, is because it lays out concrete recommendations for how all of you, how our ecosystem partners, our stakeholders, from foundations to individuals to family offices, policymakers, even media, how we can all play a role in supporting the success of these incredible capital allocators. So before we start, I want to thank Elaine Rasmussen from Social Impact Now and Connect Up, who led the research and the survey that forms the foundation of this report. Elaine could not join us today, but we think of her in spirit, and we really are grateful to her for all she's brought to put perspective into this report and into the recommendations. My deep appreciation also goes to Aliana Pinheiro, our impact director, who you'll hear from shortly, and also to Zach Young, who was our director of integrated capital solutions at BII. He's now moved on to another partner, mission-driven finance. But Zach and Aliana were incredible team members that co-authored this report with me and lent their expertise and commitment to this work. So thank you to both of you. We're also grateful to the funders of the BI cohort program, from the Center for Cultural Innovation, CCI Ambitious, to Cerdna Foundation and early funder Catali, and many others whose funding allowed us to create this incredible program and allows us to continue to scale it. And most importantly, I want to thank our fund managers, many who are on this call, who shared their stories, their aspirations, their needs so candidly. Their insights has helped us create a really clear roadmap for building an ecosystem of support that they need to achieve their transformative vision. So with that, I'm excited to invite Aliana to walk you through the key findings of the report along with the recommendations. And I think we also have the results of that poll. So I will pass it on to Aliana to kick us off.
Thank you. Yes, before we jump in, I'll share the results of the poll. So you can see we have impact investment funds and aspiring impact investment funds are our largest audience members, our largest audience group here, followed by nonprofit organizations, small businesses, some foundations, some family offices, some RIAs, and a bit of media as well, and some other. So if you selected other, please put in the chat, let us know who you are, and what you kind of where you're coming from today. That would be great. I will stop sharing that poll. And we'll have another poll at the end, so stay on your toes.
And Aliana, we now want to spotlight you.
Yes, let me remove spotlight from you and spotlight myself. Okay. So thank you, Betty, for that great introduction. And before I dive in, so I'm Aliana Pinedo. I'm the Impact Director at Boston Impact Initiative. I've been here for close to 6 years now, and really watched what we have done at BII be exported and transported across the country and across North America to support the different organizations that we've been working with to build funds in their places. So let me start at the beginning. In 2019 and 2020, BII was being asked to share its model of place-based impact investing with leaders across the country. And BII founder Deborah Fries and the managing director at the time, Mark Watson, designed an 18-month cohort program to train these leaders to design funds focused on economic justice and racial equity. That first cohort really laid the foundation for our program. We now run a 4-month program annually. So you can see here in this diagram, we ran this 18-month program between 2020 and 2021, supported 19 organizations, 33 fund managers. It was a much larger group, and then subsequently worked with smaller cohorts and shorter periods of time, really refining the materials and the curriculum over time. That 4-month curriculum provides aspiring fund managers with the knowledge, tools, and templates needed to design their funds, and the community of practice to do it alongside, to work with and collaborate with and learn from. Many of these funds have very creative legal and governance models that bring in community voice and participation from those that are often left out of investing. Now, these funds, over time, we've had 18 funds launch. We've worked with, sorry, I had my headphones in. We've had 18 funds launch. We've worked with over 30 organizations that have been represented by these 69 fund managers. And I'd like to tell you what this community looks like now. So one of our goals in launching this program was to support diverse talent in impact investing. As many of you know, investing generally is not very diverse. As of 2023, federal labor data showed that 63% of people employed in investment firms in any role were male, and 77% identified as white, while less than 8% were Black. A study by the Knight Foundation found that just 1.4% of total US assets under management as of September 2021 were held in minority and women-owned firms. And Diversity VC found in 2022 that 3/4 of general partners at the firms it surveyed were white. So this research shows that having diverse investment talent leads to investment in underinvested communities. And so because of that, we think it's very important to support underrepresented fund founders and capital allocators in this space. So we have the demographics of our fund managers, majority either women or non-gender conforming, non-binary, and overwhelmingly non-white. And so you can see here this diversity. It's intentional because we believe that these folks can move the capital that is needed in the communities that are underinvested. So these funds are dispersed across North America. There we go. These funds are dispersed across North America. And we at first were focusing mostly on the US, but then we've gotten folks from Canada as well, and tribal nations as well. So really quite diverse across North America. These are the launched funds that you see on this map. If we were to name all of the organizations that we've worked with, you'd see many more there, about twice as many. Just to highlight one example, which is Black Farmer Fund that participated in our 2020 cohort. Black Farmer Fund is located in New York. They invest in Black farmers, food businesses, and land stewards in the Northeast. When they finished up with the BII cohort in 2021, they raised a $1.1 million pilot, which if you're a fund manager, not a lot of money. It's a pilot. They invested into 8 businesses in New York State and really proved their model. They proved a really interesting and innovative governance model that brings in community voice and decision making. And, they proved this integrated capital model in terms of the way that they're able to raise money and deploy money. Black Farmer Fund 2.0 was launched in 2023 and is aiming to raise $20 million, much like BII Fund 2. And they are aiming to support 30 Black-owned farms and businesses across the Northeast and have raised $13.1 million as of 2024 and invested in the first 4 enterprises as of this fall. So these are funds that are working to build what they're up to, and they're making progress, but you can see the scale is small, it's local, and that can present challenges. I'll just mention, because I think it's so wonderful, that the founders that participated in the cohort, Olivia Watkins and Karen Washington, in 2023 won a James Beard Foundation Humanitarians of the Year Award for their work in food justice and bringing this investment model to these food systems. So really wonderful work that they've been doing. Okay, so here we are with the report. And I just want to paint you a picture. We heard a little bit about Black Farmer Fund, and I want to paint you a picture of what these funds are like. The folks that are running these funds come to our program. Many come as ideas, pilots, very early stage. Not all of them have well-funded organizations that are starting, that are then starting a fund or backed by well-funded organizations. Many of them are startup organizations themselves. Fund managers might be working in different full-time roles, doing something else or something adjacent. And like entrepreneurs, they have to dedicate this extra time, extra hours to build this fund for their community. Many of them start out with pilot funds of maybe around $1 million to $3 million, like Black Farmer Fund did, and they have small staff and few resources. And this, combined with the need to juggle multiple tasks, led some of the survey respondents that that Elaine, our researcher, and the kind of person who was behind the research of this report, led them to respond to her in both survey responses and qualitative interviews, that the funds really come out in fits and starts. It's slow going, and causes stress and exhaustion. And so I just wanted to highlight, because Elaine underlined this for us, that, yes, you're going to see this very like beautifully packaged report with needs and recommendations and challenges, but there is a very human element here that is really important to highlight, and just make sure that we are understanding that folks that are building these funds may not be coming from huge amounts of resources and backed by large impact investing institutions. Many of them are acting more in a startup environment. So I wanted to just kind of give you an overview of that and make sure that we are always centering the human element, because I think that is part of what makes this cohort and the alumni a really special group. And this community of practice has really been gelling and coming together around some of those needs. So for the study itself, we had 15 respondents to quantitative studies, surveys, 22 respondents to qualitative interviews, and together this represented 17 funds, which actually encompassed 70% of the participants that had launched funds at that time. So we really targeted, the surveys and the qualitative interviews were open to everyone who had participated as an alumni at that time, which was actually before the 2024 cohort was launched. However, we did make sure to really ensure that we were getting responses, or really push for responses from the funds that had launched, to make sure we were getting broad participation among those funds. And so here I'm going to outline the needs here. So what we found is not particularly groundbreaking. There is a need identified by these impact fund managers for capital, not just investment capital, but working capital for operations, unrestricted grant funding, and support for market rate salaries. So on top of the investment capital that they definitely need, there is a need for this operational capital, and both to support the just general operations, but also to attract the talent that is needed to run these funds well. There is also a need around operations, which is related to that capital piece. Back office support, such as, fund manager platforms, fund management platforms, accounting, legal services, but also templates, because not every lawyer, even if they're, from the big firms, not every lawyer understands the intricacies of these smaller, concessionary funds and these charitable loan funds. And so having templates and having lawyers and legal services that really understand the needs of the community and the needs of the fund, and what their vision for what they'd like to do is needed. Marketing and communication support, storytelling, and really getting the word out and the message out about their work, and impact reporting support. I'm the impact director at Boston Impact Initiative. Not every fund has the ability to hire a whole person to dedicate to doing impact management, measurement and management. And so in some cases, folks are bringing in consultants. There's a lot of outside services that can do that, but it is needed in this space, because part of the return that investors are expecting is impact return. And so these funds need to be able to provide that reporting. And finally, we have the networks, and support. So access to investor networks, getting in the room with the right people, getting in front of the right people, having the connections, and getting kind of vouched for by warm introductions, things like that. But also peer connections. So yes, the connections to capital, but also connections to other fund managers. They're looking for expert consultations, experts in particular sectors, experts in various areas that can support them in the development of their fund and the execution of their fund. And finally, as I mentioned earlier, with the stress and exhaustion that can be generated from the work that it takes to start up a new impact investing fund, mental health support, culturally competent, support and services and coaching, so that people feel heard and seen and supported as they do this work. So those being the needs identified, again, these I don't think were groundbreaking, but important to name. Okay, so the recommendations that we came up with, I think these do, maybe not groundbreaking, but I do think that these are really the highlight of this report, because it can help us all as stakeholders in this space understand how we can participate in supporting impact fund managers. So one piece that is crucial is catalytic capital. Catalytic capital is investment capital that accepts higher risk and lower returns. And risk, by the way, that is kind of traditionally defined. Often we see risk, people saying, oh, it's riskier to invest in, in certain communities or earlier stage entrepreneurs or certain types of industries. But it's because it's the unknown, it's the risk of the unknown, or the risk of that has been generated by the system as it is. If we're not doing credit checks, if we're not doing personal guarantees, what is the risk? So I think there's, redefining risk as well is an important piece here. But investment that accepts higher risk and lower returns to generate positive impact and enable other investments to come in that otherwise wouldn't be possible. So this is, it can be first loss capital. It can be capital that, can support fund development and operations. It can be capital that comes in and then encourages others to invest, maybe at a higher interest rate or higher return. And, key here is that it's unlocking additional investment for communities. So we have key actions here outlined. And I think, I won't read them to you, but one piece that I just want to touch on here that I think is very important is the alignment of investor expectations with community investment realities, and what the impact investor expects as return to really bring together both financial return and impact return, community impact return. We cannot talk about one without the other. And so when we say, oh, this is a concessionary fund or these are concessionary returns, yes. But what's the impact return that we're getting here? What is the risk of not investing in this community or in this fund manager? So I think that piece is really important. I'll let you read the rest of the list, but that piece is really important, and I want to highlight that for you. One wonderful example of this access to catalytic capital is the Guild and ground cover, the Guild's fund, ground cover, and the support that they received from the Cataly Foundation. The Guild is an organization in Atlanta founded in 2015. They build spaces for social change by developing community-owned and controlled models for housing, land, real estate, the built environment, and really putting that in the hands of community. And so they developed their fund, Ground Cover, that is doing just that, acquiring buildings, putting decision-making in the hands of community, putting the investment piece in the hands of community. And Cataly Foundation, which is a spend-down foundation with a very radical and progressive view of how to support these types of community ventures, provided $50,000 of a rapid response grant, over $500,000 a year of general operating capital over 3 years, and then $5 million loan at 0% interest for 10 years. There's a great article written by the head of the Cataly Foundation. I think we're going to put it in the chat. I put the link down here as well, but that was written in NPQ recently, earlier this year, just describing, why Cataly does this, why catalytic capital is so important to funding and to really resourcing these types of organizations. So this is a really beautiful example, and I wanted to call your attention to that. Next, in terms of recommendations, is around operational capacity. Now, this is related to the catalytic capital piece. And I'll just say, what Cataly did was provide not only the, 0% investment capital, but also this ongoing 3-year $500,000 in support to support the operations of this fund. And part of the operations is some of these aspects in operational capacity that can't be paid for if that money isn't there. So catalytic capital and funding, some may call it the technical assistance for funds, technical assistance facilities, or grant-making facilities alongside investment capital. But this is a very important piece and can really support the operational capacity of these funds. So some of the items that we recommend here are providing incubation support, supporting fund development. There are some that are doing this, BII included, and others as well, to help funds along to get to launch. I'd say even BII's program at present does not quite get the funds there all the way to launch. And so we'll tell you a little bit more about what we're going to be doing starting next year. But providing this incubation support and supporting the technology, you can find back office platforms and technology for loan funds. You can find it for private equity and venture capital funds. It's very difficult, and we've actually been on this journey ourselves to find an integrated solution that's combining different types of capital that's being deployed to businesses, different types of capital that you're raising to have a platform that sort of manages all of that. And so those are pain points in the industry that haven't quite been worked out yet, that those would facilitate investor reporting, portfolio monitoring, et cetera. And I mentioned a bit about the legal and compliance report support. These are things, it's not just the templates and standardized documents, but also just the sort of tools that are generally accepted among the industry and among the ecosystem to really reduce the burden on funds. And then finally, there's been this call really since the first cohort that we worked with of creating some sort of shared operational infrastructure. Is there a way to pool resources for fund administration, accounting, HR, marketing, storytelling, investor relations, so that each individual $5 or $10 million fund is not trying to staff that on their own, because they might not need that entirety, a whole person, full-time person to be staffed there. Let me go to some of the partners that we have that are working to solve some of these issues. Firms like Morgan Lewis, who we work with quite closely, Foley Hoag also is in this work, but they are supporting and advising impact funds in pro bono and low bono arrangements, but they're also experts in this. So it's not just getting any free legal advice, but really very high quality advice that's really following the creativity and the innovation of funds like Boston Impact Initiative, Boston Ujima Project, Black Farmer Fund, and others to support them to do what they want to do, invest how they want to invest, and engage with the community in the way that they want to. Another partner Betty mentioned earlier, and one of the co-authors of the report is now working there at Mission Driven Finance, but they're providing investment infrastructure and support to small and emerging funds. They run some of their own funds, but then they're also providing this support. And it's a really crucial component of the ecosystem. And frankly, they can't quite meet, I won't speak for them, but from what we understand, there's more demand than perhaps what they can cover. So many funds need this type of work. So I think, for more operations support to be built into this ecosystem and for more funding to go to those types of organizations would be wonderful and would really support these small and emerging fund managers. Next recommendation here was around strengthening the ecosystem. This is, that challenge that we had about networks and kind of ecosystem supports. Part of it is creating these communities of practice so that folks like the Cohort alumni, the BII Cohort alumni can get together. That's work, of course, that we will continue to do, but others as well, and creating these platforms for shared learning and collaboration, and even data collection, so that there can be increased visibility for these emerging fund managers. It ties a little bit into another recommendation around narratives and policy, but if you think of groups like the Transformative 25, Impact Assets 50, these lists and groups are helping elevate the ecosystem at large, but then also helping elevate some of the fund managers who are kind of breaking out and launching their funds. And I think one more thing to mention, there are some industry standards that are coming, especially in impact investing, impact measurement and reporting. There are industry standards, and I think part of, you have the Impact Management Project, Impact Frontiers, and other, ARIES, other reporting standards. But I think part of the question for smaller impact investing funds is, how does that apply to us? What pieces of that should we take? How much of that should we incorporate? And what's the burden to incorporate those? But some great organizations that are already doing some of the work to strengthen the ecosystem, besides some of the ones that I just mentioned, are the New Economy Coalition has this great solidarity funding library. I think we'll put that in the chat as well. That's listing all of the kind of fun, and this is runs the gamut from philanthropy to investors that are very aligned with the solidarity economy. They have this interactive library and some templates, I believe, as well, that can support organizations, projects, and funds or emerging funds that are looking to raise capital, but very much in the solidarity economy ecosystem. So it's a little bit more niche than just kind of broadly impact investing or community-based investing. The Inclusive Capital Collective has been around for a while. I met actually some of the folks that would eventually be in the Cohort Fund at a convening that they had in Denver in, I don't know, 2019. But they are building this community of practice. They provide research, and they've experimented with technology and ways to connect people virtually and through different platforms. And so, we're seeing, some work come out of that as well. And then neighborhood economics, which is convening practitioners generally in person, a little bit virtually and on webinars and in speaking arrangements or speaking engagements for some of the fund managers, but getting people together around this place-based work that community-based impact investing funds are focused on. Okay, I'm getting through them here. Thank you for listening. Next, we have education and shared learning. So this is also a place, where we feel like we sit partially, BII, certainly providing templates, case studies, even some templates for legal documents and learning modules. I think we have pieces of that learning management, but it can't just be us, of course. So really figuring out how can we provide best in class and standardized resources for fund managers. And again, not just BII, but how can the ecosystem in the field build these things? We're looking at this also leadership development and talent pipeline. One of the things that we're seeing that is important is that it's not just about the brave people that come and launch their funds. It's also the talent that's going to work for them. And so how do we foster and develop that talent as well, and that diverse talent, and creating these pathways for the next generation of fund managers and analysts, portfolio managers, etc. And so one great example is actually related to Roanhorse Consulting, which participated in a couple of the cohorts now at this point. But this program is designed for Indigenous women to succeed as leaders in finance and fund management. And, when Vanessa Roanhorse and Jamie Glochet, and then, Elise and Justine Correa, have been coming through and doing the cohort work, part of what they said in their story was like, how do we make sure that we are bringing other Indigenous women along and making sure that, it's not just us that get, exposed to and get access to this information, but how do we broaden this and make sure we're training up this next generation? And so Rematriating Economies Apprenticeship is doing that. And I would say there's even an opportunity for those who are experienced impact fund managers, foundations, there's an opportunity to open up your work to not only apprenticeships and fellowships, although I think those are, maybe, best practice, but you could open up your investment committee, allow observers to come in and see what you're doing and share your learning so that people really can understand, open the hood and understand how to do some of this work and get connected with the right people as well. Okay, finally, change narratives and policy. This is our last recommendation section. And it's really combining what's needed on a policy side in terms of incentives and opportunities for local and federal government to expand funding pools and support this area of development. Not every community-based fund is going to become a CDFI, a community development financial institution. But that doesn't mean that these types of incentives and opportunities for funding shouldn't be available to those types of funds. So how can we reduce barriers for these funds to get access to this and even require inclusion for diverse-led funds? I think another piece to highlight here is protecting race-conscious investing. We are in an environment and we are going into a federal administration, a presidential administration that is going to continue to kind of move forward this backlash against DEI, ESG, and other, race-conscious and social and environmentally conscious investing. And so how do we develop and protect creative tools like what we're doing here in order to continue to push this forward and not lose the ground that we have gained in this space? And so one example of that is the Freedom Economy. This is a membership-based organization. BII is a member, and that provides impact investors with critical legal resources and community support so that they can stand boldly in their power, so that they can stand up for the for the investing, the role that they know that investment can play in supporting closing the racial wealth gap and in furthering economic justice. And then I'll just mention BECMA, which is one of the funds that we supported and a close partner of ours in the Boston area. In Massachusetts, the Black Economic Council for Massachusetts, and they have gone from advocacy and policy to support the Black economy in Massachusetts to developing a fund because it made sense for them to develop a fund kind of coming out of that policy work. And we've worked with them and have actually invested alongside of them a couple of times as well. So very happy to be in community with them and supporting their both policy work and fund building work that they've been doing. Okay, thank you for listening to me. I talked a lot. Let me just see, I'm going to check the chat and see if there are any questions, and perhaps Siobhan, if there's any that you have noted, you can send them to me. Oh, I like this. Question for the folks who built funds within existing orgs. How did you navigate the below market rate conversations? I think that is a very good question. And, that might be a question. Let's see. I guess I don't know that our panelists will be able to answer that, but I think it's really about couching it as the financial return and impact return, and thinking about you have a whole pot of money for investing. How can you use a portfolio approach to use different pieces of that to advance different goals that the organization may have. And, you know, they don't all need to be market rate. I don't know if others want to respond in the chat to that very good question, but I think that's a great one. Any other questions that we have? Thanks, Jessica. Did the impact of the political season, the erosion of DEI, Fearless Fund, show up in the report? Yes, it is part of, you know, comes up a little bit in the recommendations that we have around protecting race-conscious investing. I will say that it wasn't a focus of the report. However, I think perhaps it went without saying, and perhaps it's important to say, that there is you know, we at BII and many of our cohort funds really recognize the need to continue to be able to do this type of investing unfettered. And so we are making sure to not respond and have encouraged our fund managers to not respond to, you know, this backlash and that decision in a way that kind of foreshadows future decisions, or you know, kind of allows it to have a chilling effect on our work. We will continue to do this work until we can't. And so, you know, we find it very important. Of course, we're looking to be inclusive, and I think many of our funds focus on underrepresented founders. Some focus on rural founders as well. So there is quite a lot of diversity. We're not only focused on, you know, very specifically race-conscious investing. But I think the other question is, what's the risk of not doing it? And so we continue to work forward there. I think I'm going to move on to the panel, and I'm going to get see, we have the panel, and I'm going to set up our speakers to speak.
Well, thank you, Aliana. That was terrific. It's a lot. This report is chock full of amazing recommendations on how we can better support not just the fund managers that are part of our program, but the broader field of impact first investing. So we do encourage you to take a look at the report, to go through at least the executive summary, but the deeper recommendations have really actionable items for those of you that are in this field and are looking for creative ways to play a role. So I'd love to now transition us to the fireside chat. And by the way, our webinar does go till 4:30. So encourage you to stay if you can, because this is the opportunity to hear from two of the participants that have been part of our cohort program. So I'd like to first introduce Benjamin Van. He's an award-winning social entrepreneur, impact investor, public speaker, and economic justice advocate. He's the founder and CEO of Impact Ventures, a 501c3 startup accelerator, and an integrated capital fund with a mission to empower talented yet underestimated women and communities of color through inclusive entrepreneurship, community wealth building, and integrated capital. He is based in Texas, and he's a member of the inaugural BI cohort from 2020. And then next is Justine Correa. She's a fund building specialist at Roan Horse Consulting based in New Mexico. And she's currently developing the Moonsoon Fund to support Indigenous matriarch-owned social enterprises. She's got over 10 years of experience working with tribal communities in various capacities, including working with the local Native CDFI, deploying loans to her tribal community. And she's a member of our last cohort of cohort 4 from this year. So I'd love to get a little bit of a sense of your funds and what you're working on. And we're going to keep this fireside chat to 20 minutes. So I'm going to encourage you. I know, Ben, this is like hard, but I'm going to encourage you to keep your answers really crisp and succinct. But I first would love for you to give us an introduction of your fund or the fund you're building, 2 minutes, and then share how did the experience of being part of the BII cohort program help you shape your fund? So do you want to, I'm going to start with Ben.
Guess I have to start first since I was introduced first. But hello, everyone. I can't see you, but I'm so glad to be here with my friends here at BII as a member of the inaugural program fellowship cohort. I like to say the first pancake. The first pancake always doesn't come out perfectly round. As we were in a pandemic as well. So I'm sure my experience might have been different than others that have benefited from the resources today. But I'm based in Dallas, Texas, as was mentioned by Betty and team. And for us, we came from a background organizationally with a deep subject matter expertise in technical assistance and business support. And so our fund was launched out of the need of our entrepreneurs not fitting the traditional mode of either venture capital, not having the growth metrics of venture capital, but also not having the underwriting criteria to go into a bank or speak to a CDFI to qualify for a business loan. So with that, I would say gap in mind, we started exploring different financial models that could work with entrepreneurs that were deserving, were talented, smart, and had great businesses, but just didn't fit the traditional profile. And so we launched a pilot fund called our Inclusive Capital Fund, where we deployed 1.5 million in about 73 enterprises throughout North Texas and Texas. Similar to, I think mentioned Black Farmers Fund, we tested a pilot just to see what type of products would be most advantageous for founders, but also what size of capital they might need. So in combination with us running our pilot program and also being in the BII program, it allowed us to really test out our model and figure out what was going to work best for our community. So now we are in process and submitted to become a CDFI. And our fund, Ivy Capital, which is a subsidiary of Impact Ventures, which it took a long time to get there. I know Aliana outlined some of the challenges in fund building around really just structure and legal compliance and things of that sort. But Ivy Capital is our fund vehicle that is a subsidiary of Impact Ventures, our 501c3. That is our $20 million fund to provide flexible debt and patient equity capital to entrepreneurs of color and underrepresented entrepreneurs throughout Texas. So from a nutshell, that's what our fund is really designed to do, provide that flexible, diverse types of capital. And then also participating in the BII program, I'll highlight kind of like, I guess I would say 3 main key areas. Community support. When I was going through the program, obviously it was in the middle of, or really coming out of, well, no, we were still in the thick of the pandemic. So having that community support that you can meet with on a weekly basis, just to kind of keep your spirits up, keep you motivated, keep you pushing through everything that was happening in our country externally, was such a benefit. The incubation support, having folks that are building funds that might be similar or somewhat close to what you're trying to do, you have that opportunity to learn. My cohort was the largest. I had 18, I think, other folks, or 23. I can't remember how many were in my cohort that I could bounce ideas off of, that I could leverage in thought partnership to where I didn't feel like I was doing this alone. So there's a lot of expertise in the room for shared learning and experience from all of us. Some folks in the cohort were coming from an activist standpoint. Some of them had strong financial backgrounds. So that diversity was really there. And then connections and key introductions, making those introductions to law firms, to other folks that were key in helping build the foundations of our fund. I'll stop there and keep it succinct.
Ben, thank you. Wow, that was awesome. Thank you for that. And what excites me too is the path, that you're taking to become a CDFI. And also you had shared with me that even when you get there, you're still going to be one of one fund in North Texas doing investing, right? That's diverse led. So again, it just shows you the need for this kind of capital in a huge state like Texas, which has a ton of entrepreneurial activity, right?
Yeah. I'll go ahead.
Go ahead.
I'll let go. I was gonna lead with that part around why Texas, because I think sometimes there's a reputation that comes with every state, and every state is different, and every fund it's different, but things to know about Texas. Obviously, we know Texas experienced probably the some of the most harshest slavery and economic injustice on African Americans, that have the largest population of African Americans by state in the state of Texas. However, there are zero CDFIs headquartered in Dallas, in North Texas. We have other regional offices, but oftentimes it's one person supporting 13 counties that oftentimes don't have the resources to support them locally. So when you talk about the need, if there's one place we need to get this right, it's definitely Texas.
Yeah, yeah. No, and thank you for doing the good work there. We need you. We need many more Benjamins in Texas. So I'm gonna go now to Justine. Same question. Give us a sense of the fund that you're creating, because you just finished the program Cohort 4, and in addition to the fund you're launching, a little bit of how the BII program helped you.
Yeah, Guatsi Haupa. My name's Justine Correa. Thank you so much, Betty. And also thank you so much, Benjamin, for giving that succinct version of your fund. Really excited to be here, and just want to thank the BII team for asking me to speak and talk a little bit about the fund. And really, the Moonsoon Fund is a fund that has been in the works. It's a part of a greater vision for the Indigenous funding ecosystem, and truly builds off of the work that Roan Horse Consulting has been doing over the past maybe 6 to 8 years, even longer. Roan Horse Consulting has helped to co-create the scaffolded funds that came out of Native Women Lead years ago, as well as partnered with organizations like Nusenda Credit Union to design and launch their microfinance program. That program provided microloans for Indigenous entrepreneurs and entrepreneurs alike across the state of New Mexico. And now currently, Roan Horse Consulting is partnered with Rural Community Assistance Corporation to build out and co-create their Rooted Relative Fund, which is now piloting in Arizona and New Mexico. So through that work, we were able to affirm what we already knew, which is that there's still a deep need for funding that is not quite microfinance, but isn't quite venture. And so this Moonsoon Fund really sits in that middle piece and addresses the financing gap that we have seen and continue to hear from entrepreneurs that it's needed. So this fund, the Moonsoon Fund, is a $10 million restorative integrated capital fund that focuses on matriarch-owned social enterprises that are looking to scale their businesses. We prioritize the return on Indigenous investment using a rematriation lens. And what that means is we're focusing on recentering Indigenous women as caretakers and leaders of economic systems that support their family, communities, and tribes, ultimately bringing back a rebalance of feminine energy back into decision circles. So although we haven't fully launched yet, we're anticipating launch next year. One thing that I would highlight as well is that we are taking a different route, and this fund is not going to be structured under charitable loan fund model, but rather a for-profit model. So that's a little bit different. And within, the BII cohort network, I think we were able to connect with a few folks who are also going this route. So that has been helpful to us as we're continuing to learn and build this in real time. So a little bit about our fund. It's needed, of course, and it's really amazing to be built by the powerful Indigenous women who have been working in this space. So I just want to shout out, we're co-building this with Vanessa, Roan Horse, Jamie Glochet, my colleague Elise Dempsey, and then also huge support from Common Future as an organization. This is going to be seeded through Roan Horse Consulting. And so really excited to shed light on that. I think secondly, to speak a little bit about my experience is that, through the BII cohort, I think for me, it really just provided a sense of that community. I think that Ben mentioned, this is really hard work. To launch a fund is really difficult. And so being able to have connection to others who are in the same space that are building and actively trying to launch these things that are needed within their communities is very helpful and supportive, and really just gives you a sense of not being alone. I think it was very helpful in the way of, BII was really helpful to me in getting this fund thesis, going from a fund thesis to actually being able to kind of create a pathway to launch. And I think there were many things that were provided for that, specifically a lot of tools, templates, even just, access to other cohort members in the field, and then also just the amazing team at BII. They're so knowledgeable around these subjects. I think one of the things that I really got help with was our fund model, and we worked closely with the templates that were provided from BII. So just I think it was amazing. I know I had a different experience than Ben did, and Vanessa and Jamie, who I work closely with. But overall, it gave me a sense of community, and also, just was really helpful to lean into those who are doing the same work, and being able to like share resources, strategies, ideas. That space was very generative and just great to be a part of.
Thank you so much, Justine. Yeah, I mean, that is the feedback we get, that the collective learning, being in relationship with each other, is one of the values of this particular program. It's the cohort model, but also the ability to learn from others and not repeat the same mistakes, right? I think is really important, because BII is also still learning with all of you. And so, to your point around shaping this fund, the Moonsoon Fund, as a for-profit, like, we will be watching with lots of curiosity, right? To see like how do we use that new model to create an even more sustainable type of fund structure. So excited for you, and just looking out for your success. So I'm gonna go to our next question around what the ideal investor-investee relationship looks like. And in it, please do cover anything beyond just financial capital, right? As part of what you would love that relationship to look like. A recent prospective investor asked me, what does an ideal investor relationship look like? And I was like, wow, that's a really thoughtful question. And it made me think, beyond just money, what would I want? So I'd love for you to share a bit around how you think about investor-investee relationships. I can, do you want to, Justine, do you want to start, or Ben, you ready?
Sure.
Sure, go ahead.
Okay, I'll go.
Yeah.
Yeah, so great question. And I think as a nonprofit, I'll use a very simple model that I think most of you can resonate with and understand, is kind of the 4T model, right? Time, talent, treasure, and testimony. And I just recently added on the last one of testimony, because I felt like, wow, using their voice is equally important, right, as their money. But from a perspective of all of our stakeholders, whether it be donors, whether it be mentors, advisors, board members, investors we see as part of our stakeholder community, their time, their talent, outside of just their treasures, right? How are they spending their time and their talents with us, right? Are they volunteering on a committee, whether it be a board seat, or whether it be an advisory committee, or maybe chairing a special funders committee or investment committee, or maybe sitting on our actual investment committee reviewing the opportunities that come down the pipeline. There's several opportunities. We have what we call a market access partner, where if you're really passionate around entrepreneurs and really helping our portfolio companies, being a partner in that way and being able to open up doors for our portfolio companies. And so we see it not just as a one-stop shop in terms of, or one opportunity from just a financial component, but from a resource standpoint, talent, introductions, et cetera. And the testimony part, I think, is also key, because again, just like on this call right now, Aliana and Betty can say as many times how great the program is and how great their work is, but Justine and I are the true biggest marketers, right, and biggest, advocates of our experience in the program. So as an investor, if you're able to lend your voice to us as well, especially in a space where there's a lot of noise in the ecosystem, being able to lend your voice and your testimony around what it's like to work with us, and sharing with your friends, and advocating and bringing them along the process, I think for us is an ideal partner. And we understand that takes time. It's not a thing that can be rushed, but just a partner that's willing to start somewhere with us,
Yeah.
and not just give us a check and say, go figure it out, but actually roll up your sleeves and get into the work with us.
Yeah, no, that's terrific. I mean, that door opening piece is so critical. It's literally investors using their own political capital to help advance your work is really important. Justine, how about you? What does your ideal investor-investee relationship look like? You're going to be starting the journey of raising capital. So what is that profile, and how are you even thinking about connecting to investors?
Yeah, definitely. I think we've begun here and there testing it out, but really that investor-investee relationship is one that is rooted in trust. I think for an investor, of course, to provide, all of the things that we've been saying, catalytic resources, multi-year resources for these funds to grow and thrive, is super critical. And then just trusting, that us as Moonsoon Fund, we're stewarding those resources where they need to go, and building this kind of for Indigenous women by Indigenous women, we know where we need to steward those resources to make the most impact. So highly focused on impact first. The other key piece I think Ben spoke to was that, it's more than just, maybe beyond the resources in terms of, being able to provide additional connection, additional resources, any other assistance, wraparound supports that might be beneficial to us as a fund would be super helpful as well. And we just want investors, we want to go out and seek investors who understand, who are really trying to do this and honor our approach that we're taking and how we're wanting to do this and provide this for our communities. So, just making sure that they're aligned. So, just doubling down on that. And yeah, I think that's where I'm at right now. And again, we're going to be vamping that up now in 2025 for our fund.
Well, that's terrific, and a great segue to my last question, which is, what is next for you in 2025? We know you're launching your fund, and I would love for you to share, how can this group here, the folks on this call, which you saw in our poll, range from investors to ecosystem partners to other fund managers, how can this community support you right now as you look into 2025? But just why don't we go back to Justine? We'll flip.
Yeah, no, that sounds great. Yeah, leading off, we're going to be really vamping up our fundraise come 2025. So again, in that area, we're looking to fundraise for our back office needs to help us sustain our operations. I think that's been something that's been so difficult, and I think continues to be difficult for funds that are launching. Um, and then, just raising the rest of the investment capital. Um, I think the other piece is that as we continue to navigate, and I'm sorry, my voice is a little bit, it's kind of fading. I have a cold, so I'm getting through it. Let me know if you can't hear me. I can speak up, but going back to the point around, protecting race conscious investing, I think us as a fund, we're being mindful of the racial equity work being targeted and really trying to position what we're doing for our borrowers, not as a racial demographic, but a legal and political identity deserving of reparations. And really, I want to see who else is doing that, but really leaning into that as Moonsoon Fund and really moving forward. So continuing that conversation and really leaning into what strategies folks are taking, to be conscious of what we're doing right now. And then also um, going along the same vein of we're trying to raise our entity and launch the fund. So again, we're doing so through a for-profit entity. And so any learnings or approaches or things that have worked well for folks are something that we're also interested in connecting with those who have done that and are wanting to share any things that they're thinking about or have worked for them. And then lastly, I think one of the other things we're doing is before we launch our fund, we are going to be warehousing a couple of deals or doing a couple of demonstration deals through Common Future as a partner who's been super supportive and of the launch of this fund. And so thinking a little bit about, if there's any other advice in getting those rolled back into the fund, and if the people have done that before, if there's any advice that they could give to us and how they did that and what worked for them. And we're happy to share how that goes with us, goes for us as well, to the larger group.
Oh, I love that. Yeah. I mean, I think a number of other funds, as they were starting warehouse their transactions. I mean, BI did that too for our fund too, but we had the benefit of already having a fund one. So we did warehouse early before we officially launched the second fund. So I love that opportunity to learn from you in this journey. So we'll be making sure that we connect folks to the learning you're sharing. Ben, what about you? What's next in 2025 and how can folks on this call support you?
Yes. So one of the things we are launching, or one of the things we realize is that the ecosystem needs to change. Where we are in Texas in a very bank-heavy environment, we don't have a lot of innovative foundations or I would say individuals that are really leading the charge for impact investing or racial investing for racial equity or gender equity or et cetera. So we're very bank kind of heavy climate, which was kind of one of the things that prompted us to become a CDFI. And so this year, 2025, we're launching the Small Business Equity Underwriting Toolkit, which is a spinoff of the underwriting for racial justice work that Beneficial State Bank is doing on a national level. We're doing that on a regional level, kicking off in partnership with JP Morgan. They came to the table to say, hey, give us some tools and resources on how we can create more equitable policies and underwriting policies. So that's a big initiative. And we'll be doing some, I would say, more broader listening sessions and stakeholder engagement. So there's opportunity to do a virtual, be a part of that at a virtual stakeholder engagement interview sessions. The other thing, just like Justine and maybe some other, many other folks, including you all, is raising capital, that catalytic capital. Because we are a bank-heavy environment, pursuing the CDFI route is kind of the gold standard for banks. So we've created a banking advisory council where we have about 20 banks that have come to the table with us to be a thought partner and a partner in helping launch our fund. But we have to have loan loss reserve. And so what we're looking at for those on this call that might be national funders or national entities to leverage some national relationships to help us get our loan loss reserve so that we can get a 1 to 5 match on that loan loss reserve. We're looking for $1 million in loan loss reserve that will unlock $20 million in investment capital from our banking community. And so that's a key thing that we're really trying to do in 2025 that we think will speed up our capital raise.
Thank you for sharing that, being so clear and specific around what you need, right? Because we do need not just philanthropy, right? But we need our corporate and banking community to really step up and step in and not backtrack at this time in particular. And I love the trust-based investing framework. It's a lot of the work of your funds, but also the BI cohort funds is your models are really trying to create systemic change by transforming past practices, right? And create more equitable and inclusive ways of investing. So I just commend you for the work that you're doing. I thank you for staying in this journey. It's hard work, just like entrepreneurs, you're finance entrepreneurs and you're also change makers. So I just we all appreciate everything that you do. So I am now going to transition us to the call to action. So part of why, we did this report was to highlight your needs and what the ecosystem could do to better support you. But we have to do this as a collective, as a community, as an ecosystem. So I'd like to now introduce Savannah Johnson, who we brought to BI. She is in her 3rd week. So I just appreciate Savannah for jumping into this conversation so quickly, but you come with so much experience in impact investing, and part of why we brought Savannah on, as well as Siobhan Prophet, who is our Director of Education and Partnerships, who also just started a month and a half ago, is to help us build the next phase of the BII program. It's to provide these ecosystem supports to leverage and unlock more capital for your funds, but to also deepen this community of practice. And so I want to invite Savannah to share the call to action, what many of you could do to help unlock more catalytic capital.
Wonderful. Thank you so much for that introduction, Betty. It is great to be here with all of you on the call. So we've heard from each of the managers who participated in the survey that informed this report, and now we've heard from Benjamin and from Justine. And as a next step, we want to equip you with calls to action, which are segmented by your organization type. And I encourage you, like everyone else has on this call, to review the full report for a detailed breakdown of each of these calls to actions. But from a high level, we invite foundations to carve out impact first pools in your endowments to make catalytic investments. We detail this further in the report, but as defined by the Catalytic Capital Consortium, catalytic capital is debt, equity, and loan guarantees and other investments that accept disproportionate risk and or concessionary returns relative to a conventional investment that otherwise would not be possible. So impact first catalytic investments are really what prop up early stage impact companies and funds to be able to eventually attract market rate capital if their model makes market rate capital feasible. For first-time and emerging fund managers, an injection of catalytic capital means access to flexible, patient, and risk-tolerant capital from mission-aligned investors and funders. So both Benjamin and Justine nodded to the importance of that mission alignment and the importance of that patient, flexible, risk-tolerant capital. And if foundations carve out these pools, there will be more support for fund managers like those two. Next, foundations can provide accompanying operational or technical assistance grants with their investments to fund managers in order to reduce operational burdens, cover back office, cover overhead expenses, and help them access events, conferences, funder convenings, things that introduce them to other funding sources and get their funds more exposure. On the high net wealth individual and registered investment advisor side, we invite those folks in the ecosystem to include community-based impact funds in their menu of investment opportunities. You can do this by partnering with organizations like BII and the managers we support in our Cohort program and alumni community in order to deepen understandings of the transformative potential of solidarity finance. On the donor-advised fund side, we invite DAFs and DAF administrators to allocate undeployed capital to impact first investments. As I'm sure many of you know, there are over $200 billion in unmobilized DAF assets that could go a very, very long way for impact funds and companies capitalizing and operating in underinvested communities. Alongside capital allocation, DAF administrators can educate their donors on creative uses of DAF capital beyond grants and set distribution goals to move charitable capital faster and move more charitable capital. Policymakers can allocate public dollars to catalyze and capitalize community-based funds and CDIs. Media can expand coverage to highlight fund manager stories, the role they play in expanding financial access to underinvested entrepreneurs and projects, and highlight our ecosystem and uplift our ecosystem broadly. And lastly, service providers, professional service providers like law firms and other fund management service providers can build impact investment practices and open source offerings to serve the needs of this growing market. With that, and again, check out, that was a lot in a very short period of time, so please do check out the more detailed calls to action in our report. But with that, we would love to poll everyone on the webinar of the recommendations put forth today. Which one or ones can you or your organization contribute to?
Betty, I think you're on mute.
Thank you so much. I should have learned that at this point. So Savannah, thank you so much for going through the call to action. I just want to point out that beyond what we've recommended, there's so many steps that each of us can take, right, to amplify and support both emerging funds and also the underlying businesses that they're investing in. So even by spending dollars, right, in local communities, by making donations or contributions to a fund in your community, you are helping to build the ecosystem. So yes, please answer the poll. We'll share that in a moment. But I just want to continue to highlight the report at the end has a list of all of the fund managers and leaders that have participated in the 4 BII cohort programs. The 18 funds that are launched are also listed. If you're inspired today, please reach out to any of them. Learn more. All of them are very open to sharing what they're learning, what they're investing in. So encourage you to build relationships with them. And we also invite you to join us in building the infrastructure to deploy resources and capital to these pioneering funds. They're all working hard to create a more just and inclusive economy. And we feel the responsibility to foster and mobilize our community to help support. The time for this bold, fearless action is now. And as all of you know, we need to do this in community and solidarity and in deep relationship with each other. So let's see what our poll says. So let's see, 39% of you say expanding access to capital, 39% also expanding capacity building, like technical assistance, training, and resources. Half of you can contribute by fostering collaborative partnerships. Love that, building alliances with stakeholders. And it takes that, right? It's going to take a lot of partnerships to help build the ecosystem. And another 39% strengthening community engagement. That's great. Thank you so much for indulging us in the poll. We will be sending out a recap of this call, the recording, the slides, with ways that you can continue to support. If you are media that is on this call, please reach out to Aliana or myself, and we can provide additional content and resources for you to share the work that we're doing. And then just to end, we had shared with you that BII has now taken the opportunity to better understand through this report and through this research, how can we play a role in supporting not just the fund managers that have been through our program, but the broader field of impact first funds. And so our commitment to the field is over the next 5 years, we're going to be working to build a number of resources out. One is a first mover fund. As you heard, the field needs more capital. Our funds need more capital, but they need early capital for operations, for first-time investments. And so thanks to funding from a number of foundations, including Wells Fargo Foundation, an announcement we'll make later in January, we're going to be shaping with our fund managers. We're going to co-create a first mover fund. This will be a pilot fund to provide that first in capital to the participants of our program. Second is you heard the need for deep supports, resources, advising, expertise. We're going to shape a fund incubator model. So our cohort program is more like an accelerator. It takes you through the journey of designing and identifying the kind of fund that you want to create. But then the hard work begins to actually shape it, to launch it, to work with lawyers and advisors to get it off the ground and begin fundraising. And so the fund incubator will provide that deeper support to our leaders. And then lastly, we will continue running our fund manager cohort program annually. We will start recruiting for cohort number 5 in the spring of 2025. So be on the lookout for that. And we're going to continue building out our education programming and staffing up there. So excited about the work that's ahead. Again, Savannah Johnson and Siobhan Prophet have joined us to help build out these sets of resources. And we're going to be doing that in collaboration, co-creating with our cohort participants. So thank you so much for joining us. I have one question here. Are there any resources for alumni who weren't able to come to the convening in Boston? Yes, reach out to us. reach out to us and we will share what we have. Everyone, thank you so much for joining. Wishing you a very happy holiday, an amazing new year, and we look forward to seeing you all again in January. Take care.